So Oracle have $108 billion worth of debt. Michael Burry has just announced that he's adding this to his list of short positions via the options market. I'll get back to that in 1 minute. And the investment grade rating that they hold so very dear is in question. So it is a very, very complicated and slightly concerning picture, to say the least. And that's very well represented in the stock price and the price action over the last 3 or 4 months. Oracle has been used as the poster child for AI, capex exuberance, and of course, concerns over the balance sheet, and the CDS has exploded to the upside, the credit default swaps. So it's a mess, but it's very well priced in mess. And as you can see by the way that the Oracle stock has been trading now for quite some time, every little rally gets hit, and ultimately it's trading very, very poorly, and there's no conviction whatsoever. Friday was an interesting day. It was up over 5% on no additional news. I think it's a combination of factors of people rotating into the unloved parts of the market. I'd like to say the unloved high-quality companies, and Oracle is a high-quality company, but its high-quality status is, of course, in question, because at the end of the day, the only thing that makes a company truly high-quality is their balance sheet, their earnings and their quality of the earnings and the earnings per share and their balance sheet. And if you've got negative free cash flow of $12 billion, by definition, you are not particularly high quality. But here's the point, and this is the point that I think we all need to focus on. That's all the bad news. We all know it very well, and that's why the stock's trading where it is. What about the next year, 18 months? They have an enormous amount of orders to fill. An enormous amount. They have 7 different line items in their revenue department, one of which was up 700% year on year in the AI space. Now, it's a game as ever between the growth rate and the cost of that growth rate. It's the same in the macro world with regard to the interest rates and the 10-year yield versus growth. It's exactly the same with a company, and with Oracle, it's been a huge focus because it's a little bit of a concern. Now, the question is, can they grow those revenues and get themselves out of debt and get free positive cash flow again in 2 to 3 years' time? The answer is, I think, most likely yes. This is one of the best companies in the world who have an incredible product in a very, very high growth space with a very, very, very connected, wealthy, high quality CEO. I would be shocked with all the creative off balance sheet funding that they do and all the sources of funds that he's got, that this turns into a bigger credit problem. I would be shocked.